Howdy, everybody. Howdy, Brian here for quantlabs.net. Today I want to talk about stats with crypto bots. This can be applied to pretty well any asset class, but this is for crypto and it's different application. So when you look at the world of crypto, a couple of things I want you to pay attention to is the time frame I'm using. I'm using 5-minute data. I'm using the last 24 hours of data in one spreadsheet here. I've got another one. This one's for 3 hours. Another one's for 4 hours. As I said, we've got one for the full 24 hours. So what kind of metrics are we looking at? We're looking at the pair, the futures pair. We are looking at standard deviation, which is another way of saying volatility, the mean over that time period that we're measuring, kurtosis, skew. Now, this is important as well. A lot of people don't figure out is the number of positive returns for those 5-minute returns over this time frame, which is over the last 24 hours. The number of negative, the size, the frequency of the positions negative, and then we look at the standard deviation over three. Standard deviation of 3 up to 3, and that's on the upper band and then the lower band. But the ones I really want to look at is standard deviation, mean, number of positions, and number of negatives. So this is again over a 24-hour period. So what I can do, and I just do simple stuff by sorting, ranking and sorting, because what we're looking for, what are the best performers out of these 23, 24 coins? So that's what we're kind of looking at from a historical point of view. And again, this is over the last 24 hours. My point of view is if you go beyond 24 hours, it's kind of useless because crypto moves around so much and there's really no consistency. It's not like you can use if you're trading in Forex, or you can forecast off of calendar events or commodities off of news events, so on and so forth. So crypto doesn't really offer that. At least it's not predictable. And you're just trading off of pure price. So in this case, what we're sorting on are two number of positive returns and the mean as well. That's the order. So here's the order that you can see here. So it's XLM, ETC, BNB, and let's say Chainlink as well, and then Tezos here as well, and then Ethereum, Bitcoin Cash. One pattern I'm noticing here is when you look at my database, if you're familiar with it, and you look at the big four, as I call them, and again, those are Litecoin, Ethereum, Bitcoin Cash, and Bitcoin. You can see they're moving negative now, but this was done about 2 hours prior. So again, this is how fast the crypto space works and how fast it moves. I'm noticing there's a huge everything's really now correlated around Bitcoin performance, where if Bitcoin was performing one way, you'd get like 2 or 3 out of 23 that would move against the direction of Bitcoin. I'm not seeing that anymore. They just all seem to be moving together, and that makes it a lot more difficult. On top of that, it's a very tight range bounds. That's why I'm using statistics now. So this is my thinking. So we have the daily returns here. So if I go into this spreadsheet, and as I said, I've generated one set, which this one is. This is for the last 3 hours. And I have another one for the last 4 hours. Now I'm showing you this here because, so again, this one on the right is 4 hours. The one on the left is 3 hours. A couple of things you need to really watch to see how overall the market's doing. Right now, and this is all based upon, for forecasting, it's really historical performance you're using, and using that historical performance to gauge how far you want to forecast it for market direction on any of these coins. So one thing I'm noticing here is when you get coins like this, where the number of positive and negative returns start to even out, that means that the market has either shifted or is shifting back to the downside. So that's over a 4-hour period. Now, when you look at the leading coins that are outperforming the majority, which is in this case is 4 out of, looks like 24. So there's 24 coins here. So only 4 out of 24 coins are outperforming the market. And I can know that is because when you look at right here, the equal number of positive versus number of negative positions, they're even. So we only have really 5 coins that are outperforming, or another way of saying there's more positive returns than negative returns. So right there you can kind of gauge that maybe the market's starting to slow down for the last 3-4 hours. So it's not as strong as it was maybe 6 hours ago, let's say. And I can tell you the way the crypto market moves, it all oscillates together where you'll get this sudden trend of strong performers, and and again I can measure that, as hopefully you know, with the bot that I've got. The crypto risk with these 4 that I'm measuring, I do a weighted average among those over the last more than 5 weeks now. And if I was to show you that, you would see how range bound the coins can be. And when they do move outside of, let's say, the weighted average of a positive 2, then you're moving into an opportunity where there is opportunity to trade. The way I've designed these momentum-based bots is now 2. It takes a while for them to adjust to say, can we confirm that this is an up market so we can start trading again? And what tends to happen is the opportunities are not as long for the bots to recognize that it is safe to trade, and then it goes back to negative. So we have to adjust our bot design or strategy design here to match those market conditions. Not saying that these bots that I've designed or these strategies are useless when the market moves up, and there will come a time when the markets will move 5-6% overall among the big 4. Right now, you'd be lucky to get 2% move among the big 4 and rarely step outside of 1.5% with a weighted average. So this is another way to look at the market using statistics. As I said, and one easy way to do it is to measure the number of positive versus a number of negative positions. So as I said here, we have up to here at Ontology, this one right here, that's where the market becomes break even at that time when this Excel file was generated. So there's only 5 coins right now outperforming the market. Another way to measure that is by mean. And again, you saw how I was able to use both mean and number of positions versus number of negative returns. So let me do that comparison again of. So this right here, what I wanted to show is the order of 4-hour versus 3 hours. So this is a 4-hour. Behind here on the left is the 3 hours. So when you measure 3-hour versus 4-hour, there's not much difference. You can see the order is pretty well the same. Cardano, ADA, Bitcoin Cash are the top 2 performers for the last 3 or 4 hours. And then the next would either be Bitcoin or Ethereum. The only difference is that Bitcoin is 3rd, Ethereum is 4th, and then for the 3-hour here, Ethereum is 3, Bitcoin's 4. So you know the difference between 3 and 4 hours, not much, but it's a really good time frame to measure these type of stats. On top of that, you can do the same thing on looking for the number of coins that are at that, we'll call it break even, where we have the same number of positive versus negative returns. Remember, these are all 5-minute time frames. So we now have 1, 2, 3, 6, 8 coins that are outperforming that versus 4-hour. Okay, so that's something else to figure, is that 4 hours ago the market was not strong, but the market 3 hours ago was stronger. I mean, again, you can always use the mean to know average price moves over those 5-minute bars as well. Another thing a lot of people come up with is volatility. So let me just go over the 24-hour ones, probably easiest. So if you look at, again, I'm no Excel expert here, and I don't plan to be. I just know the very, very, very basics. But I'm sure there's better ways to do this. But if I do a sort on the standard deviation, another way of saying volatility. So if I do that and do a sort on standard deviation from smallest to largest, that's going to tell you over the last 24 hours which ones are going to be the least volatile. So you can see here we have Bitcoin, XRP, Ripple, and XLM, let's say top three. That's not as much of a standard, but the patterns I'm seeing is what I'm telling you. So volatility will play a factor if you want to get decent performance with long-term strategy holds for, let's say, maybe a daily strategy, not an intraday, but a daily or an end of day, or even hold on positions over multiple days. So this is something that will be important, is the standard deviation. So looking at how we can look at the number of positive versus number of negative positions, if the market does start to slow down, you'd want to have your bought, if it's mean reverting strategy now, not a momentum based, but mean reverting, only focus on those, assuming you're on an exchange where you can only long only, you want to focus those bots, or focus only on those coins that are outperforming the break even, where, again, in this case, the ontology, this one here, where the number of positives versus the number of negatives. So you'd want to focus in a long only exchange to only focus on those coins that are going to outperform. So that would be these top four. So that would be Cardano, Bitcoin Cash, Bitcoin, and Ethereum. So that is a good metric to work from. But because if you do this every so often, maybe on a 4-hour chart, or sorry, a 4-hour time frame, or maybe even on a 3-hour time frame, it's a little more sensitive, but you have enough data to kind of make a rough estimate, guesstimate on where things are going, and then only focus on those coins that are outperforming. Because once you know this information from a historical point of view, everything now comes down to probability, because that's all you have really to work for. You're using historical performance and probability on what's the likelihood that these coins will start to move, or at least stay above that break even of that are outperforming the ones that have more negative returns. So that is one way to know which ones to mean revert on. In terms of market direction, we have things like kurtosis, skewness, and the standard deviation as well. So I'll do further analysis on that and research on that. But I just wanted to show you what I'm looking at in terms of just a very basic mean reversion type of strategy, on top of the methodology to come up with it and the kind of metrics that you could use. So hopefully this will help you out. As I said, if you want to learn more, get the free books at quantlabs.net. And then if you want to get my DVD, I've got all kinds of stuff on that as well at quantlabs.net/DVD. Thanks for watching. You have yourselves a good day, and we shall talk to you later.